So based on my history and experience of trading the SPY, along with how the weekly chart is setting up, we are currently setting up for an overall bullish week. I'm going to be showing you step by step how to prepare to trade the best setups at the best prices heading into this week. Let's get straight into the analysis. So in terms of the overall SPY, I'm going to be starting off with the weekly chart. In terms of the weekly chart, this is what I want to bring awareness to. You can see right here, we had a previous resistance channel towards this 563. Once the SPY had a break above 563, it started forming this crunch. It started forming this, bullish weekly daily candlesticks. And you could see there was about, 4 of them in a row. And then you could see this week right here was overall bullish. So if you were to just look at this overall pattern, you can see right here, it's the same exact pattern that's forming. The SPY has some resistance at a higher channel towards this 608, drops back down, spikes back up, and then you have these 4 daily candlesticks. Then you have these 4 daily candlesticks. It's trying to form higher support above this previous resistance at 600, also towards this 608 previous resistance, right? So the same pattern is occurring. Now in terms of the support, you can see right here, the support was forming above the previous resistance level. As of now, the support is forming, slightly below that previous resistance towards the 600, but we do also have some higher support that just began to start forming towards 607.80. So based off this weekly chart, we're basically setting up for a higher launch pad into this week. And in terms of another confirmation that is confirming that, it's going to be an overall bullish week, like it could be something like this, where we just get a strong bullish overall week like this daily candle, or a strong bullish, overall week like this daily candle, right? And the extended hours trading session is currently confirming it because we are gapping up right now, pushing for those new all-time highs, right? So with that being said, the focus is going to be to buy call options. Now let's get into the overall levels. So in terms of this overall bullish week, on a strong expected bullish week, one of the best things you can do is buy oversold dips. And another tip I can give you is, if we're playing for an overall bullish week and we're getting a massive oversold dip, one thing you can do instead of just buying a 0-day option and day trading it is, if you're playing for an overall potential bullish week, you can buy yourself a little bit more time and pay a little bit more and hold the trade. In a sense, it doesn't have to go in your favor right away. Plus you have more time to make more gains on it as well, right? I just wanted to bring some awareness to that potential idea. If we're setting up for an overall bullish week and the SPY is having a massive oversold dip, that means that it's going to recover eventually. So in terms of like an easy money making opportunity, you can give yourself more time on the option and just kind of hold it out. And if it doesn't play out in terms of the day trade, then you could swing trade it. That's just an idea. I'm just giving you, just a different perspective, right? On something you can do on an overall bullish trend week in terms of easy money, right? This gets a lot more, advanced and complex. But anyways, in terms of some levels, let's get into the levels. So the main focus is going to be the break and retest strategy. The levels I'm going to be giving you are the best levels. So let's get straight into it, right? You're going to want to be using strong bullish 30-minute candlestick confirmations at these overall levels. So in terms of one of the first levels that I want you to keep an eye on, man, it's going to be this extended hours level right here, which is currently aligned with that weekly chart resistance, right? So you can think of this level right here as like a launch pad. This is the level where the SPY, if it drops back down towards this like 608, right around there, 608, 608.60, is gonna have a launch pad and push for new all-time highs. It's likely gonna be an amazing level to buy the oversold dip opportunities. Based off of that weekly chart pattern, we are setting up, so you can see right here, it was forming higher support towards this previous weekly resistance, towards this 597. Now it's just beginning to form some support at 608. So it's setting up for multiple strong floors at or above that specific level, which is why if we drop back down, based off this overall pattern, you're going to want to be buying calls at this overall level. And another thing to bring awareness to in terms of recent history on the SPY, like I've been telling you to do, with the break and retest strategy, when we have a resistance level, so you can see right here, there was resistance on the SPY at 605. We had a break above 605, overreaction to the upside, drop back down, green, red, green, along with a bullish 30-minute wick, bullish confirmations for the break, and then the retest, right? Now, in terms of the latest break and retest level that has not been tested, the new level is right here, but I don't want you to nickel and dime it, because if you've been studying the history in these videos that I've been posting, it's been bottoming at the extended hour support if it's close. So it doesn't have to be directly at this level. So the new previous resistance is at 607.50. But since we had this move during extended hours, which was not tested, along with the weekly chart pattern, and remember this extended hours price action, the SPY has been specifically having break and retest during the extended hours trading session when it drops back down for the first time during the normal trading hours session. It tends to spike and bounce first. It's been working very successful, and it's very likely to work due to the weekly chart pattern as well, along with the confirmation we're getting of the gap up. You need to be laser fucking focused on buying the dips. So I don't want you to nickel and dime it. 607.50, you can just auto buy fucking calls at that level, and then it drops to 607, you can auto buy calls at that level. But I'm telling you, this is the level, man. You see a confirmation. If you want, you can even auto buy calls at this fucking level as well. 608.60, slightly above the previous resistance, slightly above the break and retest level. Go with the extended hours level as well. Those are the best fucking levels. The weekly chart confirms this is going to be a great level, along with the previous history. If you've been watching the game plans, where whenever the SPY has been hitting a break and retest level, during the normal trading hours session for the first time, right? That formed during extended hours, right? It's just been working. It's been bouncing absolutely fucking phenomenal, man. So that's going to be the break and retest level, 608.70. Level below that, 607.50. Level below that, 606.50. Buy calls, all those fucking levels, you can buy and hold calls, right? Now, in terms of a higher level, use confirmation on this, 609.70. 609.70 is the previous closing price. If it reacts bullish, buy and scale into calls. If we drop to one of the lower zones and then you see 609.70 react to support, that's a confirmation to get in, add, scale into calls as well, right? So 609.70 is going to be the previous closing price. That's going to be the gap close reversal level. If it reacts bullish, then we'll have a higher break and retest, right? And then in terms of the final level that I'm going to give you here is going to be this 610.60. This is going to be an interesting level, man. This 610.60, you're going to see right here, it reacted as support, shot up towards those all-time highs, reacted as resistance, dropped back down to previous closing price. So this is the make or break gap and go level. The SPY is gapping up. If we drop back down to 510.40 and react to support, is going to be bullish, and then it's going to try to break above 611.15. Then it's going to try to go to 612.50 to 613. So I want you to measure it as like a 2-point move. Basically, when you see 610.50 react to support, you're looking at a 2-point move to the upside, right? 2 to 2.5 points, 3 points max overall in terms of like short-term intraday day trade, right? So in terms of like the new all-time high breakout, I would just keep the focus on measuring it as like a 2-point breakout, right? Now, another thing to note is if you are seeing a very strong breakout, I would say 2.5 to 3 points at any of these levels, right? So any of these levels that I gave you, 611, 610.40, 609.70, 608.70, 607.50, right? If you're seeing a 2.5 to 3 point bounce breakout at those overall levels, then if it drops back down to that previous level, you're going to want to buy calls. But the difference that I want you to understand is these are break and retest trend reversal levels. So a trend reversal is likely to occur, but unlikely to hit towards 606.50 to 607.50. But if we did drop to 608.70, that would just be a great level to auto buy calls, right? I do think it's a little bit more unlikely to drop to this lower overall zone. But if we did, great level to be buying calls. But 608.70 is the more realistic level where we could drop to, where you're going to want to be buying calls as well. And you could scale on at the lower levels and hold the trade, right? Or buy a second strike too and hold both of the trades. But, that's more of the support in the reversal and the break and retest. Now, I want you to think of 610.40 and 611 as like and even the previous closing price. Yeah, so even the previous closing price. Think of the previous closing price, 609.70, 610.50, 611, since we're at all-time highs. You could think of that as like resistance, right? So the new potential higher break and retest levels. So when using the break and retest strategy, one thing that I want you to focus on is when you're buying at upper resistance levels, right? So the market, it's really setting up for a strong overall bullish move. There's always that possibility where, even on an overall bullish week, we get a nice oversold dip first, right? This is why one thing that's important to mention, when you're buying at higher overbought resistance levels, is really smart to just look for a 2.5 breakout to the upside, right? So for example, this was some major resistance right here that we had during extended hours towards 605. If you're seeing like a 2.5, 3, the higher, the better, right? Especially if it's a higher resistance level, right? The more it increases above that breakout before dropping back down to retest, the better. You want an overreaction to the upside, overreaction to the downside, right? So on the higher levels, you're looking for like a 2 to 3 point plus breakout, 610, 610.40, 611, strong breakout, drops back down, then you buy the calls on a retest. On the lower levels, I want you to think of it as it's just more of a reversal. This is a break and retest level. It's the more oversold one that's likely to hit the 607.50 to 606.50 zone. More of like a reversal trading strategy. 608.60, more of like a reversal trading strategy. With the higher resistance levels, just think of it as you're looking for an overreaction to the upside, a very strong break to the upside, and then a very quick pullback overreaction to the downside, and then buy for the break and retest for the reversal, right? So one tip I can give you is when you're playing the higher levels, look for a stronger, bigger breakout very, very quickly, and then look for the drop to be just as quick or even quicker, and then play the overreaction. So what I'm telling you is, like, since we're at overbought levels, because I gave you multiple levels to buy calls, right? At the end of the day, you have to use this information, what I'm giving you, right, along with confirmations. But what I'm telling you is, like, if we break above 611 and we just go to 612, we just go up 1 point, and then we drop back down to 611, I'm less likely to just get in calls, especially automatically. I have no interest in getting in automatically because it's not big enough of an overreaction. Now, would I be willing to play it? Yes, possibly, but the confirmation would have to be perfect. Now, if this went from 611 to like 614, we spiked like 3 points, and then it came just crashing right back down, I would be more lenient on the confirmation and take it more as an auto buy and just kind of get in. So that's one tip that I can give you that's been working very successful for my trading, is the overreactions on the higher levels. You can be a little less lenient on the exact confirmation and more of like an auto buy, but still use a confirmation, right? And then being extremely less lenient if we're setting up for a bullish week and we hit oversold dip buying levels, especially on break and retest levels that have not been fucking tested. Like, this is the most oversold break and retest level that's not been tested, 607.50. Those fucking levels, just get the fuck in. So I can assure you, if you apply this information that I gave you and you use confirmations, you should have a phenomenal overall week. Use the levels, use the confirmations, use the information that I gave you. Let me know how you ended up doing trading into this week. That's what I have to say in terms of the SPY. Heading into this week, I will continue to keep you updated in terms of this market, man. Another thing to keep note of is, this is like a crazy headline market as well. There's been a lot more headlines than usual ever since, Trump took office. And with that being said, there's been some rapid moves and rapid changes. Things can change very, very quickly. But in terms of like how we're, in terms of like market, in terms of micro day trades, it's turning into a different type of day trading market in a sense. But we're adjusting accordingly. But I really do want you to understand, man, we are genuinely setting up for an overall bullish week. So that's going to be my focus, is just confirming that overall weekly candle is going to be bullish. It says that this, based off of the weekly chart here, is saying that this is going to be an overall bullish trend, overall bullish trend week. That's in terms of like how we're setting up in terms of like how this daily weekly chart is setting up is literally saying that the overall week is going to be bullish, and the best thing to focus on is going to be buying call options, right? And I gave you one tip, use confirmations at all the fucking levels. If you're going with the higher levels, then it's best for an overreaction to the upside, overreaction to the downside. If it's a small move, use the best confirmations on the higher fucking levels if you're gonna fucking trade them. And then oversold levels, just auto fucking buy with trend reversals and use confirmations, and you could scale into the trades, If you buy calls and a level works, and then we go up to the next level and you're still in, or if you see a confirmation, add to the calls, or you could buy another strike, or you can get back in, right? So just keep that in mind. And one thing that I wanted to mention as well is, in terms of this pattern, right? So you can see it's like we got this V on the weekly chart. You got some resistance, then it starts to bottom out when this red candle forms. It starts to bottom out when this red candle forms, right? You see all the fucking similarities, that I'm talking about. I'm telling you, this weekly chart is fucking golden, man. I only show you the weekly chart when it's fucking golden because I want to show you what the best setups at the best price looks like, right? It's not going to look like this all the time. I'm telling you, like in terms of like how we're fucking setting up, we are setting up for such an easy opportunity to make money if you know what the fuck you're doing, man. So I wanted to point this out as well. When we started to break above the resistance, as we're starting to break up above the resistance and now gapping the fuck up, look at this pattern as well. I should have mentioned this from the beginning, but look at this. You have this green weekly candlestick facing to the downside, green weekly candlestick facing to the upside, green weekly candlestick facing to the downside, green weekly candlestick facing to the upside. Next week is strong and fucking bullish, breaking above previous week highs. One thing to note in terms of that, exact fucking pattern that ended up forming, we did end up dropping slightly towards the previous week lows. So in terms of the previous week lows is at 598. Last time it did end up dropping slightly, but it was a much more massive move. But overall, in terms of like measuring the move, we had how many points? So the previous week was at 574. Next week, 6 points. So that's what you're looking at. At the bare fucking minimum, a 6-point move to the upside this week is what we can potentially be looking at if this history repeats itself. And we track this one step at a time, confirming the trades, waiting for the overall moves, waiting to use the overall strategies. But basically, in terms of how the weekly chart is setting up, it is setting up in terms of a profit target at the bare minimum 616 at the bare minimum. Now, if we don't drop back towards previous week's lows, then we're looking at 620 potentially, right? But 616 is more realistic. I'm just telling you in terms of how this is all setting up. Overall bullish, man. So I gave you the level for previous week lows. So, if we go back to that, this is just one strategy I use as well to measure the moves, but this gets more advanced. This is far more advanced. You measure the ladder. You see how the ladder is reacting with the confirmations, and then as time gets past, you have a better understanding on, how the week is going to close, what ladders are going to hit, what levels in the ladder are going to potentially hit in terms of the more macro levels. A more macro level is obviously slightly above, previous week lows, or potentially 618 to 620 plus, right? But in terms of where it bottomed at 565, then bottomed at 567 almost. So basically 2 points. So 600 is a nice whole round number. But I'm telling you, man, in terms of like levels, this is 602. I would go at 602. I would just blindly fucking buy calls. If we went that fucking low, 602 to 601, I would just blindly fucking buy calls, hold it, and swing trade that fucker. That's what I would fucking do. And then above that, like I said, I gave you the level. It was, 600 and 750 to 606.50. So just understand, if 606.50 reacts bearish, the next level for calls is all the way fucking down at 602 to 601, and that's an auto buy. This is extended hour support that has not been tested along with the weekly measured move. So if SPY reacts bearish below 606, we are hitting fucking calls at 602 to 601, and you can even look to swing fucking trade that overall idea, right? So I gave you ideas. You got to use confirmations at the ladder along with the information I provided to you. And I'm telling you, you should have a phenomenal green week. I mean, we're going to absolutely crush it, man. I mean, I don't know about you guys, but in terms of my experience trading with the information that I provided to you, I crushed it, man. Like, you let me know if you know anyone fucking else that did something like this on fucking Friday, man. At 1:55 p.m., I bought 610 puts at 34 fucking cents, and I ended up selling those at 52 cents. That's nearly 100% profit return on a slow, choppy, shitty day where plenty of people went fucking red. And I bought those puts at 2 fucking p.m. If you look at 2 p.m., literally right here, 2 p.m., when the 30-minute candlestick is setting up for red, man, I just applied my information along with my experience. The video literally said the market is going to drop from a day trading perspective, because that's what we're focused on here. We're focused on, day trading. If I see a swing trading idea, I'll let you know. I mean, I gave you the only swing trade idea I have for you as of now is the 602 level. I mean, you could try 607 if there's bullish daily confirmation, but that's a whole nother strategy. I'm not really talking about. I gave you the idea, but in terms of confirming a swing trade, is more based off of the daily chart. But anyways, man, you just need to understand, in terms of the information that I gave you, I told you, look for a resistance level, and the resistance was right here. This was resistance, 611. We dropped to 609. That's a pullback. And I told you, if we retest the high of the pullback is right fucking here. If we retest, buy the fucking puts. And then in terms of the curriculum, red bearish 30-minute candlestick confirmation. And we just kept on retesting the high of day. And along with my experience, it literally told me at 2 p.m. that shorting and buying puts whenever it retests the highs is going to be a great day trade, which is why I literally just bought these fucking puts before the 30-minute candlestick closed red, because my strategy, my system, and my experience and my intuition told me to just get in before that confirmation. There's already many confirmations on the day that my idea worked out that you could have used beforehand to scalp and make some quick fucking money. You have to get in quick. Basically, when this 30-minute candle closes red, you buy puts into the 1-minute spikes, sell the dip. When this 30-minute candlestick closes red, you buy puts into the 1-minute spikes, sell into the green, right? Sell into the red drop, into the green profit, right? It gets more advanced. I'm just teaching you some of the basics, right? Obviously, the market can start to spike on a break and retest level, and you could see this is the resistance, this is a break, and in terms of the level I told you to go short, it was the high of the pullback, or the first 30-minute red candle. First 30-minute red candle went lower. First 30-minute candle, second 30-minute red candle went lower. 30-minute red candle every single fucking time at the fucking resistance that I gave you. I literally just said wait for a fucking pullback, or the high of day where we have a pullback, right? Extended hours, if there's a pullback, go with that level. Normal trading hours, if there's a pullback, go with that level. If you applied the information, you could have went green. Like I said, with my information, you know me, I like to wait. So I waited for the first 30-minute red candle. It's fucking bearish. It started to drop. So I'm saying, oh shit, we have two resistance levels. We have the all-time highs, and then we got the lower fucking highs during the normal trading hours where it's pulling the fuck back. So, not much time left. Puts are fucking cheap. We're retesting the levels, and the 1-minute chart was bearish. If you looked at the 1-minute chart, that's bearish. I use 30-minute and 1-minute when I'm day trading. So I got the puts. As soon as I got in, they were so fucking cheap. The 30-minute candle flipped red, and then I sold those for nearly 100%. That was the trade of the day. I mean, overall, trading was a shitty overall day on Friday, but I did fairly well for the opportunities, that we're setting up, and for what the market gave us. We did fairly well. So that's what I have to say, man. For those of you who use the information, you should have went green. I literally fucking told you 30-minute red, retest highs. It was so fucking simple, man. Right? So just make sure when you're day trading, you set a fucking profit stop so you don't go green to red. A lot of people like to set stop losses because they size in too big and they risk too much. And one of the reasons why they're doing that is because they're buying an asset class where they have to size in big. But with far out of the money option contracts, they're so cheap and so low risk, you don't have to risk much at all to make very, very big gains. And you set the profit stops to protect your profit so you don't go green to red, leave runners, sell deep in the money. Like I said, we have a very strategic system. But if you bought the fucking puts with the instructions I'd give you, and you set the fucking profit stops, I mean, you should have made at least a 30% return on those contracts. I mean, my return was nearly 100% at the speed of fucking light on a slow, shitty, choppy day. But anyways, man, I mean, even right here, the break and retest strategy worked with the green, red, green. It's like, man, if traders would just use the break and fucking retest with the green, red, green pattern, they'd be green 80% plus at a time. But at the end of the day, at least 90% of the people watching this video are not going to fucking use it. That's where you and I are different. So, anyways, man, it's just so fucking simple. Resistance, overreaction to the upside, overreaction to the downside, green, red, green, buy the fucking calls. Wait for the 30-minute candlesticks to fucking close, right? I mean, I didn't wait for the 30-minute candlestick close to this time because the information that I provided to you was if we retest the highs, I'm just going to buy fucking puts, right? Obviously, a 30-minute candle red stick confirmation is good, but the problem with that is you're getting in at a higher entry, right? If I would have gotten in here, I would have paid more with a higher entry with that confirmation. So the way I saw it through was it already fucking crashed from the level, and along with my experience and intuition, it literally said it was just going to fucking drop on the retest. Later on in the day, the contracts are a lot more cheaper. They're getting ready to expire fucking worthless. Cheaper is lower risk with bigger fucking gains. So I said, I don't need a fucking confirmation. It was already confirmed multiple times in the day. The contracts are fucking cheaper now. It's worth the risk without more of a confirmation because there was already confirmations before. If I were to wait for more of a confirmation, what would I be waiting for? I would be waiting for a worse entry. And in that situation, with the information I laid out, along with the 30-minute candlesticks that already set up bearish, with my intuition experience, it just made sense to get into the puts. You know, sometimes I'll wait for the 30-minute candlestick close just for a trade to set up, just for a trade to set up later. It's a lot better to trade. It's a lot better to buy puts here at 2 p.m. than it is to buy here. You need to understand that options are very fucking complex, man. It's not the same trade you're making early into the morning versus later into the day. Later into the day when the contracts are, when the zero dates are cheap, getting ready to expire worthless, they're going to be so fucking much cheaper. And they can have the same fucking moves. So if they go in the money with very little time left on the shot clock, the returns are going to be much greater than in the morning. To make those massive wins in the morning, you got to hold. You got to hold for a very long time and you got to have a big move. But the beauty of trading in power is you can get rewarded on very small moves if you know how to time it well. And part of the timing was just understanding that I knew the fucking level. And the confirmation already worked out multiple times with a red, green, red bearish pattern. So, I'm just trying to show you in terms of like ways I think about this. You have to understand it's a very complex system. Part of it relies on the information that I'm providing to you, just along with my intuition and experience trading the SPY. I mean, my intuition experience based off the 1 minute chart with the information combined, it literally said to just buy fucking puts every single fucking time we retest the high fucking day, fuck the confirmation. But it didn't say that, it really didn't say that until like later into the day. Once I saw like there's red bearish 30-minute closing, red bearish 30-minute closing, I'm saying, oh shit, it's working out. So just buy the fucking puts when it retests later in the day. That's the best trade idea, cheap and low risk, right? So I'm just putting you on into different ways to thinking about this and how to see this through. But yeah, I mean, that's how I saw that overall trade. So it's the first link down below in the description. If you do want to join us and trade alongside us, it's the first link down below. You can get started today. You can gain access to our trades in our real-time zero-day options trading alert system. We are known for buying cheap, low-risk, far-the-money option contracts. We're known for selling them deep in the money for the biggest percentage gains. We have the highest win rate in the game doing this, and it's very, very cheap, very, very low risk to get overall started, right? With that being said, in terms of some background to the system, we do not use stop losses. Everything we put into the contracts, our max risk per trade is our entire position size. We don't need a stop loss. And if the trade goes down 50% plus, 70% plus at a time, the dead play that goes down 50 to 90% plus comes back to life and goes in the money, right? So if you just hold the fucking trades, you're going to see 70% of the time, even when we don't time it properly, it comes back to life and goes in the money because we trade the trend and we don't go far out enough to where it's not going to go in the fucking money. Do you understand? Like we go far out, but not far out enough to where it's not really going to go in the money. So if we're down a fuck ton and it comes back to life, we're still going to make massive fucking gains because it's likely to go in the money. And when we are down, a lot percentage wise, sometimes we buy a second strike. And when we buy that second strike with a trend, the timing tends to be a lot better and it's later into the day. Cheaper, lower risk with better timing means better trades. More experience trading on the day along with more chart development means better and easy trades, cheaper contracts, right? What do you want to do? You want to pay more for puts at this level with smaller moves? or you want to pay less for puts with bigger fucking moves, right? I'd rather pay fucking less, make bigger moves during the power hour trading session, pay less, higher rewards, bigger moves, power fucking hour. If you're going to trade the market open, you're going to have to hold those trades for a long time if you're looking for exponential gains. You know, you could still make big gains in the morning if the move's massive, but if you're looking for those exponential gains very, very quickly, where you can just get in, get out, time quick, it's during the fucking, power hour trading session, especially on like a channel day. You really have to ask yourself, if it's going to be a chop and channel day, would you rather buy puts here or would you rather buy puts here? I'd rather buy puts here because it's already confirmed multiple times that it was bearish in a sense, but it's more of just understanding that the contracts are cheaper is lower risk, bigger percentage gains, and the power hour trading session sets up for big moves as well. So I'd rather just take advantage of that overall opportunity instead of just kind of holding into this kind of chop, and just trading off this confirmation. Another thing, like I said, to be aware of is just like, waiting for this confirmation. If you got in once the confirmation triggered, your entry would have been lower and the contracts are higher. That's not good. Lower entry, higher prices is not good, right? But if you got in here, it lacks that like real-time confirmation. But in terms of the history, the history said it's likely going to drop. But in terms of real-time confirmation, I used the 1 minute chart, I used my intuition, it said it's likely going to crash as well, right? So over here, when I got in, the contracts were a lot cheaper. The price was the same. The chart was already more confirmed, and it's a volatile time to be trading towards this time close to power hour, and it's likely going to have big moves. So it's just a likely better situation on an overall channel day. Like I said, this gets, very complex in terms of like how you break everything down. But I just want to bring awareness, to just some ideas and just how I perceive the overall charts and stuff like that. So it's the first link down below in the description. Like I said, we don't use stop losses. If you're broke, please don't trade. We don't want no fucking brokies trading, right? If you're gonna whine, bitch, complain, do not fucking don't fucking trade, right? For those of you who are serious about fucking trading, you want to make fucking money, you want to learn, you want to trade alongside us, it's the first link. Like I said, man, no fucking stop losses. What we put in is what we're willing to risk. Our max risk per trade, our multiple could be a couple percent of your account. Now we do set profit stops to ensure that we don't go green to red. Going red is a choice when you're already green. So setting a profit stop is just the move, right? So we set the profit stop and we move the profit stop up higher so we don't give back the bulk of our gains when there's a pullback, right? So obviously on trades like this, right? So let's say like right here, when we were in calls on this. Market just went up straight for 90 minutes. So in that particular situation, we're not getting profit stopped out until this little pullback right here. As we're moving our stop up, we're not getting profit stopped out because the pullback isn't big enough to get profit stopped out, right? And then we get profit stopped out right here. So on days like this, when we're just going straight the fuck up and you have a profit stop set, you're going to be able to collect the bulk of that move. Now, on other days, you're going to get profit stopped out, right? Now, I don't recommend putting your entire position size in that profit stop. Leave some to run, like 30, 20% at least. Don't put it all in the profit stop, right? But don't go green to red in that particular situation. It does depend on the move though. But And we add to winners to increase the winnings as well. I told you about the second strike we do. So it's very complex, man. You need to understand that we are running a very complex operation that is working for many, many traders. Our format does not work out for everyone, but at the end of the day, 90% of the people who join our program, they do end up staying for a very, very long time. And we have hundreds of members who've been with us, for over 16 months. So, it's the first link down below in the description. If you want to trade alongside us, get access to a zero-day options trade alert system, gain access to a network and community with multi-millionaire traders. It's the first link, man. It's the first link, man. With that being said, I'm going to be signing off. You guys let me know in terms of how you guys do heading into the markets overall tomorrow. I'm telling you, we're going to absolutely crush it. We're setting up for a very, very, simple, overall easy week. If you wait for levels, use informations, use the confirmations. So, I will see you guys within the chat from here.